G'day and welcome to the channel. Today we'll be looking at what's happening in the markets, check in on key indicators, see which tokens are making moves, unpack the latest headlines and have a general look around the crypto domain. Let's get into the numbers. So looking at the numbers today, we can see the total market cap is up only slightly based on yesterday, but the volume is down quite a bit. Now part of that will be probably driven by the fact we're into the weekend now. We've got crypto dominance around that 60-61%, so staying around that area for the last few days. The Coinbase app has dropped again in the rankings, so again that's one we look at as one of our signals of when we may be nearing the top of the market. So, you know, when it's in the top 10, 5, 3, that's sort of historically, or at least in the last run, that was an indication of when we were around that top of that market. The fear and greed is sitting at 32, so we're still in fear. I mean, it's down a bit from last week at the same time, but consistently been around that low 30s, definitely for the last few days at least. If we look then at the Pi cycle top, we can see that indicator's stayed flat day to day. We can see we're now showing that as a ratio. So of course, as that gets closer to a 1, it's an indicator of the cycle top, at least for the last 3 cycles, the way it's been set up. The first two, it hit 1, and then the last one, it was slightly under. So we'll keep an eye on that. We've got the historic risk is up slightly again. Most of these indicators have only moved relatively slightly on the day. If we look at the Puell Multiple is the one that we're going to look at today. So with the Puell Multiple, what this shows the daily issuance in USD over the 365-day moving average of the daily issuance. It looks at the market cycle basically through the lens of miner profitability. And when the daily issuance is high compared to the 365-day, then the sell pressure for those miners will be high. And we can see here it's been in a consistent macro downtrend from cycle to cycle, right? We can see here we're looking at it, you know, what's that? It's a 10, around a 10. The 17 cycle. We're at a 6. Topped out in the last cycle. Get up there. We're sitting at a 3, and then, you know, it's continued to come down. So, you know, we peaked for at the moment we're at a 1.51. We're currently sitting down here though, right? So we're around that 1 at the moment. So that's another one we keep an eye on. It's one of the key ones. Again, just looking at where the miner profitability sits. Obviously, it's the weekend, so we don't have any net ETF flows of note or at all to talk about. Let's move on to the top 100. So if we're looking at the top 100 here, Bitcoin's still floating. Look, we can see how that's been floating just around that 84, 85. Starting to wear on the market a bit, starting to wear on investors a bit. I think those of us that have been around for this whole cycle, it's definitely wearing down. We're definitely seeing more green on the 24-hour today. Avalanche 5.8. Hyperliquid still moving, 6.3 there. Polkadot 3.5. What else we got moving here? Near Protocol 6.6. Bittensor. It's been on the move every day, and we can see the slight uptrend that we've been seeing probably for the last few days at least. Render is up 7.5. Filecoin, again, another one that's been moving. It's had a massive, well, not massive, 7.2, but you can see looking at the little chart there that's had quite a spike. FedE, again, continuing its uptrend at 10.2. Beautiful X, that gaming one we spoke about yesterday. That's at 7.7. Injective, the graph. Yeah. Let's move on to the crypto bubbles for today. A lot of green, which we like to see. FET, render, Trump's moved. Just gives you another view of that top 100. So obviously I like to run down this chart here. Just gives you a little bit more information. You get a few more visuals, you get the numbers and the chart. So I quite like having a run through that. But then this one here just really gives you the moves due to the size of the bubbles, and just sort of, it's right there in your face. So it's really easily digestible if you're just looking for a really quick what's moved, what's trending, those sorts of things. If we look at the 200, T-Fuel, that's on Theta. That's the token that you earn for the video streaming. It's like a gas on the protocol, I guess. That threshold network, we spoke about that briefly yesterday. It's coming back down. But again, majority green in the market. We're seeing the green today. Dog with hat. Pengu. Bread over here. A lot of people will be interested in that as a meme play. It's got quite a few holders. Is that air go again? It's a smart contracts. It's an EVM. This one is interesting. This is the AIC. That's it's AI companion, so it's a virtual companion. Okay, let's get into the news. So the first one for today, UK firm buys 250 million Bitcoin as analysts eye quieter Easter weekend. Well, with the longer weekend over Easter, a lot of the markets will be closed. Obviously, people, the retail investors and crypto in general, you can just trade the whole way through, right? Whales and institutions are increasing their Bitcoin holdings ahead of Easter. A wallet linked to London-based investment firm Abraxas, however you pronounce that, Capital acquired 2,949 Bitcoin, worth more than 250 million during the 4 days leading up to April 19. The investment came days after Michael Saylor's strategy bought 285 million worth of Bitcoin at an average price of 82,618 per BTC. Large Bitcoin investors or whales continue accumulating, absorbing over 300% of Bitcoin's yearly issuance as exchanges continue losing coins at a historic rate. Obviously, taking them off the exchanges. Despite continued accumulation from whales and institutions, volatility concerns were raised by significant movements from medium-term Bitcoin cohort, which is the holders of the 3 to 6 months. It's important to note that funding rates remain relatively flat currently. Moreover, US markets are closed as we have a long weekend for Easter, so volatility could be suppressed, barring headlines from the White House. So another interesting one, just shows that adoption that's coming through, right? The more and more, and as we get more regulation, especially in the US, but in general, as we get more regulation, we're going to see more of these firms coming in and actually buying Bitcoin, putting it on their balance sheet. The next article, Fed's recession fears could catapult Bitcoin prices to 1 million by 2030. Powell warned Wednesday, April 16th, of a stagflationary situation ahead of the higher inflation and slower growth. In Q1, BlackRock's crypto chief, Robbie Mitchnick, said while speaking with Yahoo Finance, a recession would be a big catalyst for Bitcoin. An inflationary recession, the US central bank fears, may be the catalyst that launches Bitcoin to the stratospheric 1 million forecast Block and Cash App founder Jack Dorsey made by 2030. So what are the main things that can move this? There are no tariffs on cryptocurrency. National and corporate BTC stockpiles race. A Trump White House official even discussed an idea in April with Anthony Pompliano to use tariff revenue to buy Bitcoin for the US Strategic National Reserve. And we touched on that the other day. These shifts are tectonic in the scale, their implications for present market values, which is true. That would be huge, right? Because they wouldn't just be holding, like people are putting forward options for how they can actually grow that reserve, not just holding the Bitcoin they currently have. And if that happens, it's obviously going to increase the demand, therefore the price. Fed rate cuts God candle Bitcoin's price. Fed rate cuts to nearly 0% in 2009 saw Bitcoin's price move from 0.003 cents in 2010 to 469 by December 2015. Then the global asset price crash in 2020, followed by emergency rate cuts to 0% in May 2020, launched Bitcoin's price again from 5,205 on March 18, 2020 to 66,953 in November 2021. So again, a massive move. As the Fed started trimming rates down again in September 24, like clockwork, Bitcoin's price rallied to historic record high levels. Again, we know in January it hit around 108K. Number 4, US fiscal deficits are rocket fuel for BTC. There's a direct correlation since 1980 between US recessions and federal deficit spending rising to and becoming entrenched at new record high levels. And then this one's interesting. Easy dollars make hard Bitcoin more dear in recessions. So if we go all the way back to the 16th century, during uncertain times, merchants would spend and deposit the coins that were easier to make, like copper and silver, but hoard the most difficult coins, like gold. Current times, while dollars are easy for the Fed to make as long as the economy has the capacity to grow production to cover its loans, BTC is very hard to make, but demand for it continues to grow. So that would obviously see the price continue to grow as well. And then the final article we'll look at today is the Texas to hold hearing on Bitcoin Investment Act. So this is a little bit like North Carolina that we spoke about, right? So we're starting to see the states look at Bitcoin and adding it to their own strategic reserves. Texas House will assess proposals for a strategic Bitcoin reserve managed by the Texas Comptroller. No idea what a comptroller is. The act suggests annual Bitcoin purchases up to 500 million. That's massive. Imagine all these things coming together. What that will do for the price of Bitcoin and the crypto market in general off the back of that. The potential legislative approval may stimulate broader adoption and enhance crypto's market position. So again, let's end it there. Again, thank you very much for joining me. Please like and subscribe, and I'll catch you all tomorrow.